And in Europe, markets fell sharply this morning as the coronavirus outbreak continues to take its toll on the international community and financial markets. Let's get across to my colleague there at Frankfurt Stock Exchange, Chelsea Dulany, to tell us more. Hello, Chelsea. Good to see you again, irrespective of this coronavirus spread. Well, the European stocks are sliding again as U.S. plans for a $1.3 trillion coronavirus rescue package hit roadblocks in the Senate. What are investors in Frankfurt saying?
Well, it's been quite a morning here. The DAX opened about 5% lower amid these concerns that the U.S. wouldn't be able to come to an agreement on this trillions of dollars worth of stimulus that they've been planning. Republicans and Democrats remain quite divided on what the bill should entail, how much of this should be going towards workers, small businesses, and how much of it should be going to big corporations. But we've seen a big reversal in the past hour. If you look behind me, you can see this huge spike in the DAX. It's up about 1% now, and this is coming after two major policy decisions, one here in Germany and one in the U.S. In Germany, the government's federal cabinet has passed a 156 billion euro supplemental budget that's going to provide aid for workers and for businesses that are being impacted. And this is really notable because it comes on top of about 400 to 500 billion euros that the government is promising in loans and help for businesses. And it is a huge break from Germany's tradition of not spending with debt. So they're going to be financing this with debt. And so they've basically thrown that out the window and now are really doing everything they can to help the economy. But probably more important for global markets is the Federal Reserve just came out and said they're going to basically do unlimited buying of treasury bonds, of mortgage-backed securities, and they're also going to be opening these new lending facilities for things like small businesses and local government. So I think this is giving investors a little bit of confidence after the disappointment on the U.S. fiscal side.
Now, this week, investors will get an early look at how shutdown measures are impacting the European economy. What data are investors going to be watching?
It's going to be a big week for data here in Europe. We're going to be getting tomorrow a lot of the manufacturing indexes for March. So Germany, the wider Eurozone, France, all of these countries are going to be reporting how their manufacturing sectors fared in March, which is really when these measures, these containment measures were put into place in Europe. And it's going to be bad. I think analysts are expecting these to be the sharpest declines on record. And we're also going to be getting consumer confidence data for Europe as well. So how consumers are feeling in light of all of these restrictions on their daily lives. So these numbers are going to show how these restrictions, how these quarantines are impacting the European economy. But it's obviously going to take a long time for us to get a clear sense of the long-term economic damage. Here in Germany, the finance ministry has estimated that the economy could shrink 5% this year, which would be worse than the financial crisis.
Now, the central bankers say they still have plenty of tools to stimulate the economy amid concerns that they have run out of ammunition. What measures are policymakers looking at next?
Well, if we just look at this announcement from the Fed about an hour ago, I think they really are trying to send the message to investors that they do still have options. So some of the things that are included in this new ramping up of measures are things like buying corporate bonds or buying municipal bonds, which the Fed had never really been able to do to a large extent before. Here in Europe, this has also been a big discussion, particularly because the European Central Bank already has rates in negative territory, so there's not much further they can go in terms of interest rates. But we've seen multiple ECB officials come out over the past few days and say there are still things we can do. We can increase lending, we can increase bond buying, and we can also introduce a new type of government bond. They're calling this idea for a Corona bond, which would be a joint issued bond. So all of the European, all of the the euro area countries would be included in this, and it would get money quickly to other countries, especially ones in need like Italy, while sort of sharing the risk among the euro countries. This has been a very controversial idea. It's been floated since the financial crisis, and there had always been a lot of pushback by countries like Germany, which have stronger public finances. They didn't want to be bearing the load of something like Italy's debt. But now, given the circumstances, we've seen a lot more support for an idea like that.
Well, Chelsea, let's continue to keep our fingers crossed and hope that this will be contained as quickly as possible.